measure RAM has grown by 12%. Under RAM, retail has grown by 15%. And under retail, housing loan has grown by 12%. Jewel loan by 23%. Auto loan by 27%. Personal loan by 35%. So all components of retails are growing and aggregatingly grown by 15%. Under agri, the growth is 15%. And under agri, gold loan is grown by 17%. Investment credit is grown by 54%. Agri allied growth is 11%. And SHG growth is 56%. In MSME, the growth is 6%. Under MSME, micro grown by 16%, small by 4%, and medium by 14%. And corporate credit has grown by 7%. Our RAM is continuously at 60% of our total book. And as you are seeing from quarter after quarter, we are growing 13 to 15% in the RAM segment of the retail, agri, and MSME. So that was a business part of it. As far as profitability part of is concerned, our operating profit has grown on 24% on a YOY basis. Our net profit has grown by 102%. The operating profit growth is basically based on the NII growth of 25%. And in addition to NII growth, there is a growth in non-interest income as well. So under the non-interest income, the recovery in bad debt has grown by 53%. Fee income has grown by 6%. Processing fees income has grown by 20%. Cross-selling 81%. Forex 99%. So basically not only NII, other than NII measure, all components are growing. As far as margins are concerned, our margins have improved a lot. It is now touched to 3.74% is against 3.20% of the last quarter. Our return on asset has improved to 0.80% is against 0.71%. And return on equity has improved to 15.21% is against 13.83 of last. The cost income ratio has also improved from 44.27 to 43. And as far as NPAs are concerned, the gross NPA has come down from 7.30 to 6.53%. And net NPA has come down from 1.5 to 1%, and PCR had improved to 93.59%. So GNPA has come down, NNPA has come down, PCR has improved, operating profit has increased, net profit has increased, business has increased, and all components of the business have increased. Capital-wise, bank is adequately capitalized. We are 15.74% of the CRAR as on date, and if I add the profit of 9 months, it is around 16.93, which is against the 11.5. We are at 16.93, is 150% of the minimum required capital. So bank is adequately capitalized. Bank, in addition to that, growth bank is working more on digitization. Under digitization, we have launched number of journeys. From business perspective, in a retail lending side, we have come out with a pre-approved personal loan. In a first, we have come out pre-approved personal loan for salaried, then professional and self-employed, then our existing customer, housing loan customer or auto loan customer. Now we are working towards other journeys in the retail. Likewise, in agri side, we came out with a digital journey for KCC renewal first, then gold loan renewal, and shortly we are coming out with the gold loan new as well. And KCC new also we have tested. So that is basically in retail side. In MSME side, we already came out with the Mudra loan, and slowly we are coming out with the new journey. So in all three businesses, we are in a digitization. In the liability side, saving deposit we are opening through tablet, current deposit we are opening through tablet, special deposit schemes we are opening through tablets, PPF accounts we are opening through tablets. So both sides we are working on digitization. Also as operations are concerned, we are focusing on mobile banking registration, which has reached to 1.08 lakh crore as against 62-63 of the last. So we are working on that. In addition to that, in a current account, we are focusing on QR code. In the last month, we have added more than 5 lakhs QR code. So in a operation sides also, we are working on that. In a HR side also, we are doing number of things. We came out with the performance management system, wherein the targets of each and every officer has been given, then KRAs have been given, then the job family concept we came out. So number of things we are doing. As far as ease of doing HR related work or claiming allowances and all, we have all made. Digitite is in our package for HRM. We are working for digitization in the forex operations as well. So slowly first with the inward and outward remittances, then we will go for imports and for the domestic side. So we are on the path in digitizing the forex operations. This is how we are moving. So quarter after quarter, you must be seeing that our GNPAs are coming down, our net NPAs are coming down, our businesses is growing, our profitability is improving, capital levels are improving. So bank is moving in the right direction. Now I am open for question and answer.
One thing. Thank you, sir, for the presentation. Now I'll open the forum for Q&A. Can I have the floater mics, please? Yeah. So first, just introduce yourself and the media house and then ask the question, please.
Sir, Balachandra from Hindu Business Line. I believe slippages have come down significantly in this quarter. So is this a temporary thing, or is this reflecting a trend where the slippages will continue to drop?
You see our slippages are coming down quarter after quarter. You see Q1, Q2, Q3. Slightly the slippages were more in Q1 or prior to that because of the more slippage from the restructuring book. Now going forward, what we are seeing, our SMA numbers are coming down. Our collection efficiencies is 94-95%, which we are maintaining. So we are hopeful that going forward, we should be able to protect over this slippage part, and we have a better performance to come.
Okay. So the accounts under monetary list is not very big, right? Actually, how is that?
Yeah, if you see our SMA number for more than 5 crore is 0.77% of the book, which was of course 0.5 a quarter ago. But what happens, the interest rates have increased, so as a result, we are following with the customer for revised NACH mandate or a standing instruction, but only 0.77%. So we are not seeing any stress in those accounts.
Okay. Sir, 13% credit growth. What does this reflect? Do you see that, does it reflect some improving economic situation, or in terms of consumption improvements? What do you like to say about that?
So you see the credit growth is 13% in all segment. So but in the retail segment, housing, so the demand of the housing has increased. The demand, so the auto loans have increased, and demand of the education loan in our countries. So that is the way the economy is improving, the growth is happening. Likewise in agri also, MSME growth is also happening. So you see the economy is improving. If the bank's performance is good, economy is improving. The economy is improving, bank performance will be good. So in line with the economy, your performance is improving.
So last question. Do you also lend to electric vehicles? Is that how are you still analyzing, or what's your response on that?
No, we have funded to electric vehicle manufacturing as well as, and we are funding for a vehicle loan, both
both electric two-wheelers and electric cars, right?
Yeah.
Hello.
Sir, here.
I'm Yogesh Kabdas from Times of India, sir. Sir, what are the reasons for the bank recording net profit of 1 or 2% year on year? The second is, have you written off any loans in this quarter?
So the increase in net profit, I told you there are 3-4 reasons. One is the increase in net interest income, interest receipt minus interest paid. And you see the business of the bank is growing. If the business of the bank is growing, naturally your income will also grow. So as a result, our NII has grown. Dusra, our fee-based income too has increased. Our recovery in write-off has increased. Our forex income has increased. So all components of the income is showing increasing trend. And at the same time, our net NPA has come down to 1.5%. So having not much baggage per provision on net NPA. So on the one side, your income is growing, other side, your provisioning baggage is coming down, resulting into a better profitability. We have written off around 1,500 crore rupee loan.
Over to you here.
Sir, you are.
We written off basically for the getting taxation efficiency, to get a better tax benefits. Of course, we continue to monitor those accounts. These accounts are written up only for our accounting purposes, not for any other purposes.
Sergeant sir, over to you.
Yes, sir, here. Your GNP has come down to 6.53. So going forward, what are your expectations? Is there scope for further bring down to 5% or lower than that?
You see how our GNPAs are coming down. 7.3 was in September. Prior to that, a year back, 9%. Now we are 6.5%. Our endeavor is to come down it further.
3%, sir.
We all will try to a better number, sir. Why 3%? Why can't look below than that? So our endeavor is to come down.
So what are your plans on recoveries on the course or this quarter and the remaining quarter for the FY23?
Yeah, actually at the beginning of the year we said that we will have a recovery target of 8,000 crore, right? In 9 months period we have recovered 6,500 odd crores, which is 108% on a pro rata basis. So we are achieving our target. And this 6,500 crore of a recovery which we have done in the 9 months is much higher than the last year recovery. And first point. Second point is, you see in the last quarter our slippage is 1,300 crore. Recovery is 2,600. You see the prior to that quarter also the recovery is higher than the slippage. So when you are having more recovery than the slippage, naturally your gross and net NPA number will come down. So far we have opened around 62 branches. We have given permission to open around 104 branches. We are in the process of opening remaining branches.
Sir, here it is. What is the reason for decrease in cost to income ratio from 44% to 43%?
The reason for is increase in net interest income and other income. When your cost is under control, your income is high, naturally your cost income ratio will improve. So reason is increase in NII, increase in other income and controlling the cost.
Thank you.
What are the parameters you consider, like a AAA rated? Is there any change in your approach towards corporate lending?
No, corporate lending, basically we are getting good proposals from NBFCs. We are getting good proposal from PSUs. We are getting good proposal from infra, right? We are getting good proposal from city gas. We are getting good proposal from cement. We are getting good proposal from steel. A number of sector we are. Here the issue is at what pricing you are giving this loan.
So fewer branches in
So
the city.
if it is remunerative, we select. So we continue to remain choosy in this sector. What happens? Slowly, the interest rate on those loans also increased. So earlier, these loans corporate were asking at a lower rate. Now slowly with the increase in interest rate, they are also agreeable to give a better rate. So going forward also, if it makes commercial sense to us and we will be having margins, we will be growing on that.
Or are they moving to alternative sources for lending? Is there a...
The borrower will move to where they are getting at a lower rate. Simple and straight. So you see the spread in the bond market has increased, whereas in the credit market, it has not increased to that extent. So slowly the spread here also is increasing in credit market, and then going forward, that it will get a better opportunities to onboard these loans.
So fewer branches in the city is no adequate strength of the staff. Will you going to increase the staff of the stump, sir? For example, Neelankarai branch, ECR, we have to wait for more than 1 hour for any work there. Will you going to increase the staff strength, sir?
No, we have recruited around 3,000 persons last year, right? So we are recruiting manpower as well. And at the same time, we are also propagating or about the digital transactions. What we want that our customers should also move to digital transaction. Our Indo-ISIS mobile app, where we are having 1.08 crore customer. Their number of journeys we are onboarding on those apps like fund transfer, right? Like making up FDR, like loan against those FDR, making insurance, applying loans. So we are offering number of journeys on those apps. Our endeavor is not to provide better customer experience through mobile banking, through internet banking, as also to the branch. So we are in all segment we are working, sir.
Okay, sir, thank you.
So we have opened 3 digital banking units. One is in Lucknow, one is in Delhi, and one is in Karaikal. So objective of this DBU is to give digital awareness to the customer. There we are onboarding customer. Wherever the customers comes, they can have a passbook printing, they can have a internet access, they can do the fund transfer, they can deposit the money, right? So number of things they are doing in addition to digital awareness. That is the purpose of these DBUs, and these DBUs are to my mind are fulfilling the purpose, and slowly the performance too will improve.
Sir, how, hello?
You see, deposit has grown by 6%. You might be seeing in that industry also. In October to December quarter, what happens? People are having more spending in the last quarter because of the festive seasons and all. So naturally, the spending will be more, so deposit will come down. At the same time, 6% is based on in the base. What happens prior to that was a COVID year when everybody was having money in the account. The people have not used. Now the people have started incurring. So due to base effect, also that it is coming as a 6%. And our bank, we were having one of the highest growth in the deposit segment in the last year.
However, DBUs are performing.
I clarified you about the 3 DBUs.
Performance about DBUs.